This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to Monday's morning call, first of the week, ahead of what could be a little quietness before all of a sudden the Fed starts to talk about whether they will have a liftoff or put off. We'll get into that a little bit later this week. Right now what we want to figure out is what type of action do we have between now and then. So far overseas, you have Asia broadly lower but not crashing, and Europe probably flattish. So if you take a quick look at the FXI, which is an ETF that we use, it's been in a downtrend ever pretty much since breaking this key support right here and losing the 21-day. Below the 21-day, since late June all the way down, it's been resistance. And lately, you had a little bit of a bounce off the lows. So if you look here at the FXI, you will see that there is a small gap that it's been protecting. So I would want to see today, what does it do? Does it, hold this gap? Can you trade versus 35.50? You have a little bit of a double bottom. So if it can hold this 35 area and not fall apart, I think Asia will remain, not so much of a headwind. But if it starts to fill this gap, obviously the noise will get louder. And this 21-day has been that resistance where maybe if it could actually take that out at some point, you can get a little bit more of a test of higher level resistance, and that would create a tailwind. Right now, it's somewhat neutral. As far as Europe, we always look at the HEDJ to figure out, whether it's a headwind or a tailwind, just to, again, show you the trend that started at the beginning of the year. In 2015, it was well above the 8 and the 21-day, pretty much, the entire first quarter. Look how it trended above it, and then finally you had this head and shoulders pattern, which is a topping pattern, a distribution pattern. There was your left shoulder, your head, your right shoulder. That was your first initial break, and then ever since, volatility hit. So fast forward to where we are now. I think traders are trying to figure out, can this get some traction back? And as of right now, it hasn't proven that it can, except for it's out of the danger zone. For it to stay out of the danger zone, it's got to stay above this 55.50. If it starts to get below this, all of a sudden the retest talks will happen. So now as far as our markets, we have a lot of very tight sectors. We have this lower wedge that's been put in place, and typically a lower wedge makes a bear flag, which is a continuation pattern of a prior breakdown. So if you look here at the SPX, you will see that obviously, we talked about this channel that got broken right here in late August, where you had this tight wedge. Wedges are great. They show you tight patterns, and they help give you clues on which way it's going to break. If you didn't know which way this was going to break right here, okay, you really didn't have to. Okay, and then all of a sudden, right there, when it broke below with some force, that could have told you to get out of the way and get short. That was right around 2040, and that's when it engulfed the bottom end of the channel, and then we all know what happened later. Okay, so now the question is, what happens with this lower, very, very tight pattern? We have 4 days until Fed Day. Does it try and retest the upper area again? Okay, or does it break to the downside or do a whole lot of nothing until then? So what do we know? Here is your 3-day support from late last week. So right down 1935 to 1938. It's hard to get real bearish or real short, this market before then, unless at least this gets taken out. So there's ways to cheat, as far as which way we resolve. So if we start to break below 1938-ish, maybe some will cheat short for a continuation to retest the lows of that August. Okay, a lot of people are talking about that. Or, if they want to press some of the shorts and, and float up during this holiday weekend, if you do celebrate Rosh Hashanah like me, Happy New Year. First thing that's got to do is take out this 1965, then you have 1970, and then you have the 21-day, which is also resistance there. So the best thing about wedge patterns is it's tight, and you have lots of points of reference to use. And then if something happens, compelling with volume, you could jump on. Just like if you weren't sure if we would break the channel to start the year, all you really had to do is wait for that decisive break below 2040, and you would have gotten out of the way of a 180 handle down move, or got short, and you could have done real well that way also. A lot of the other sectors look the same. You do have a little bit of strength in the bios and the tech, so that can give us some clues whether or not we could lean long or lean short. You look here at the Qs, and you will see that it does also have a very high level tight pattern. So here is your series of higher lows, and here is defined resistance. So if this could take out and recapture the 200-day above 106.30, maybe it gives you some clues, that the broad indice could follow. If it starts to break below this little spot here, which is around 103.60 or 104, maybe some traders will get out of the way. So getting very tight in here. Okay, and all it's done so far, again, to show you, trends, is retest the broken active intermediate trend. Remember this? It broke here. Here was your key support back then, and all we're doing is hovering right there. So we're getting into this spot where, it's going to be a big-time rubber match here. Do the bears win and break lower, or can the bulls, maybe push the envelope a little bit higher, closer to this 106.70 or 108 even, before maybe more downside. So I think that the shorts are really probably just a little worried that if we push above this, there are going to be uncommitted guys that do get squeezed up to this bigger area right there. And then you have a whole nother trend to deal with, which comes in right there. So this is that playground of what's going to happen next. As far as the bios, looks pretty similar. You had your breakdown of the trend in the bios, right? We've talked about this breakdown. I'm not going to go all the way back, but this was when it broke the 8 and 21 day and all the moving averages. And here was your head and shoulders top pattern, the left shoulder, the head, the right shoulder, broke below the neckline, big move lower, and now it's getting tight again. So the question is, can it break above this pivot to give another push higher, which could lead it to about 364? So let's get a little bit closer there. All right, so does it do it before the Fed, or does it wait? So that's what we're trying to figure out to make some money early this week. Does it push through this 356? And if it does, you really have some room into more moving averages around 364 with a lot of little tails there. So, or does it, is this a false sense of security where they just hit it? So again, that's what we're going to be looking to see. As far as other sectors, the banks, it's good to know what they're doing because obviously they're rate sensitive. They're not acting so well. You look at the XLF, it's well off that little pivot high, but it's tight. This is a tight lower range. So if the bears want to break it to the downside, they're going to have to at least break this 3-day floor. You have a lot of 3-day floors in a lot of sectors. If you're long, use that as your stop. If you're looking to be short, that's your spot to add. And then here is resistance. So if they want to rally the banks a little bit, here's a spot up until the higher end of the wedge, which comes in a little bit closer on the XLF to about 2350. As far as oil, that's been a headwind. We all know about the Goldman Sachs call for $20 oil. It's kind of cute how they do it now, considering that I think their call was for 150 when it was 120 and it didn't happen. And then last year they called for the average of maybe $90 oil, whatever it was. They haven't been that accurate. So, look at the USO. If you're just trying to short oil because you think Goldman's going to be right, it does get tight and then it does break. This was the last time oil tried to rally off the lows. If you remember, you had a move from about 16 all the way up into the 20s and then it broke to the downside. Here it's getting tight again. So the question is, which way does it resolve? I thought this was a nice potent move off the lows. And, it looks like the next move could have been a continuation move up, and it still might. So in order for that to stay intact, you would think this like 14 area on the USO could hold. And as far as the XLE, not much interest here. You had a quick move off the lows. It's trying to hold this gap. I think some bulls, if they're looking at this for a continuation move off this to break a bigger trend, well, they're going to lose a lot of faith if all of a sudden just say Friday's low gives out, and that's a little bit closer to 82.50. So, this could have been just a bounce back, and in order for it to go back to lows, it's going to break below this 62.50. If it holds this 62.50, goes a little sideways, and is able to digest those kind of calls, maybe there's more upside, and that would help the broader indice. As far as key go-to stocks, there are some stocks building decent patterns. Some stocks that look like there could be some traction, and there needs to be some traction in names and stocks in order for the market to bounce. If these stocks can't, chances are the market's not going to have any strength, and you have to look for your setups to short and sell and stay in cash, et cetera, et cetera. Right now, Apple, had a story in Barron's that it could be 50% higher from here. Ever since it put that pivot low in on August 24th, it's been acting much better. Wedging getting tighter, and this is just nudged above this. This is why I am long Apple on my virtual trading floor. I got involved on Friday thinking that if I want to have something, I feel like if they want to push the market first, they could push Apple up to the 200-day, especially since it took out the 2-day pivot before the market showing relative strength. I like to buy stocks showing relative strength. Plus, I also am an Apple fan. But anyway, here's your next spot. Let's see if it can hold today's gap. I think it's north of 115.50. I sold a little bit, which I always do pre-market. I'm going to try and hold some to get there. If the gap in Apple holds today, chances are the market might act a little bit better, or just hold up. This was your channel in Apple, okay, and this is when it broke below your bear flag after bad earnings, below the 200-day. Now let's see if it could reclaim the 200-day. If you got out here and bought the dip, or bought in here, let's see if this next spot is better. As far as other names that could help give clues if there's any power, which you have Google and Amazon, which are loose and wide and a little harder to trade. But guys that do trade it, or guys who look for leading indicators, this Google still hangs out pretty well. If it were to clear this pivot this time, maybe there's a little bit better action. So if it can get above this 658-ish with volume, maybe some traders will gravitate towards that for a move back up towards 670. Amazon also looks pretty decent. It's already poked its head up on Friday. If it wants to rally higher with the into the Fed, here's your 640. It's above all key moving averages. So this Amazon seems like it's a better long than a short. I know people think it's got a high valuation, but as of now, technically it's one of the better stocks with Google. As far as the key stocks that we talk about, Netflix has gotten weaker. You look for little changes in momentum, and Netflix definitely doesn't act the same. Okay, we want to judge things after that August 24 low. Well, this came up and it acted frisky on that bounce back, but then had a double gap down. Citron said they're short. All these things, et cetera, and now it's sort of getting tight again. So the question is, it's up a little bit. Guys might short this if it breaks below 97 today, but make sure it holds below it, because sometimes Netflix could be cute. So if it breaks below 97 and holds it, if you want to be short, that's your short entry. And then here is that support or that pivot from a week or so ago, 93.55, and then you have the lows. If they can't break it below 97, they want to bounce this, it's got to really close above 101 in order to maybe retest a little bit of an upper area. So Netflix doesn't look the way it's looked, during the trend, obviously above the 21-day before it broke here. But a lot of stocks don't. One stock that actually looks better is Tesla. That's something to watch to see if there's any continued strength. This stock broke, below the 200-day. Had that real nice bounce on that day, like most other stocks, but it held up better. Like you look at Netflix. Netflix, did it hold up after that bounce? Here's your bounce. Not as well. So other names also, but Tesla looks a little different. So we'll see if Tesla, could give us some clues that there's a little bit more upside action. Can you buy things higher or buy things with strength and be okay? Well, we'll find that out with Apple today too. If you didn't come in Apple, can you buy it today and be in the money by the end of the day? We'll see. This level here in Tesla is like 254, 255. It will need to clear that in order to get a little bit more traction, and then your next spot is 260. So that's something to watch today and this week if they want to have something look good and strong to help lead the market, and that could be Tesla. As far as social media land, Facebook to me looks best in breed. It's one of the few social media names or any names above all the moving averages. So, if you're long this, I am long a little Facebook, perhaps be long versus this spot here around 90. And it does seem as if, if it wants to rally up some, there's some room a little bit closer to this 93 to 94 area before it's got to make another key decision. So again, above all the moving averages. So if you're just blindly shorting it, be careful. And look at this move down on August 24th. Look at this snapback, and it's actually above that high. So it's showing relative strength. You need to acknowledge things like that. As far as the banks, just to show you how they're not showing relative strength, look at Goldman Sachs. Is Goldman Sachs, above the pivot from that snapback? No, it's right in the middle. So the banks aren't sure. At this point, see if Goldman Sachs, I guess, hangs around or holds. You could even give it a little bit more room, this 180. But if it starts to break below 180 or below last week's low of 183, chances are the broader market's going to notice, and the spiders might help test the lower end of that area. You could maybe look at one other stock or one other bank. If you don't want to just look at Goldman, which has been kind of weaker anyway. Here's your lower wedge in JP. So the question is, can this hold? If rates are going to go up, chances are this takes out this resistance. If they leave rates the way they are and say we're not going to do it this year or we're data dependent, chances are this can give way, and that wouldn't be good, for the overall market. So, it is Monday. The Fed is Thursday. We have lots of tight ranges. Question is, do they push the envelope with a range going into Thursday, or do we do a whole lot of nothing? So try not to overtrade. There are some stronger names that have acted well since that August 24th low to see if there's any type of momentum in the market. Apple will be a good case today, as their China sales were okay. They're 50% more in Barron's. It's got a tight range, so see if it holds on to today's up move. If it opens up $1.50 and goes red, I think the bears are going to get excited that not even a name like that could hold up. But if it holds up $1.50 and closes well, you'll see that maybe you could buy some strength in names that are acting well, that are above their moving averages, that have a chance. Two other names real quick. UA. This looks pretty fair. It's above all the moving averages, I would say, just for clues so that some leaders could work higher. See if this could stay above 93.83. Nike also, a very strong name. Let's see if you could buy versus support if you're looking to buy anything, or if these names that have been holding up well can't hold, that'll give you clues that you get a continuation to the downside. But if this all of a sudden starts taking out 112, 113, it'll show you that you could buy some strength. Let's see what Starbucks do. Look at Starbucks leading the way a little bit. Starbucks actually poked its head above this. So above all the moving averages. That's a name you probably want to own versus the other ones that are below everything that have a wall of resistance in front of it. So look for a pattern like this. It's nice and tight, leading the way. Okay, but if you see all of a sudden Starbucks that was up nicely, give it all back, then you have this trap, and the market loves to do traps if it's going to have a bearish tape. If things want to hold up, they usually close well. And I was going to end the morning call before. I just went into some more names. So anyway, if you are celebrating the holiday, a Happy New Year. Hopefully it's a sweet, healthy, and prosperous for you. If you're not, just know that there are a lot of people not at their desks, so volume could be light. And also know that Wednesday, Thursday is a big deal. Obviously Thursday more than Wednesday, because at 2 o'clock is when the conference happens. So try not to overdo things, but try and look at the technical tea leaves of what's happening. Have a great day, and I will not be doing a morning call tomorrow. I'll see you back on Wednesday morning.